Okay, folks, a very good afternoon. This is Frank O'Connor, and welcome to our webinar on July the 7th, Thursday, for the Rubicon Indicator. Again, apologies for a little bit late starting, guys. Thank you for being patient and hanging in. I want to go through our normal process, but first up, a part of what was causing the delay today, we just got an announcement from one of our brokers, Meg, overseas in Switzerland, where we have many of our folks that are using our Skynet, that they were shutting down all American accounts to come in line with the NFA regulations. So causes some major headaches today. So thank you for bearing with me on that one, guys. We had to go to work on getting some other things straightened out, and I was working on that all day today. Some of you guys are Skynet users. You probably got our information about that, but just rest assured, guys, if you are a Skynet user leasing the EA, we're on it, and we should have resolution with another broker pretty quickly. I think we have something figured out today already, but I'll get back to you on that. In the meantime, let's get back to the task at hand. Hopefully everybody had a good week. As we mentioned on the Tuesday webinar, this is a big week, guys. We had rate announcements out of the UK, out of the Eurozone, out of Australia. And you saw the charts reacting to those kind of major news announcements. And then also tomorrow we have NFP, non-farm payroll. That's a big day. And it's a time to be cautious. A good example of what happens on NFP is right here, guys. If I go to the Euro right now, and you see this very tight little range, 30 pip range. It's been there for 5 or 6 hours actually. Let's see how many hours. Go to the hourly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9 hours it's been stuck in that little range. And a lot of times that happens right before NFP. We could see not a whole lot of action tonight. And that came after a pretty strange move. Let me go back to my 30-minute chart. We had this downward movement yesterday and today of 250 pips, and then this morning, bingo, back up 150 pips of that. Much of that has to do with fundamental news, and again, it shows you the importance of paying attention at the very least to basic fundamental news. What was driving it was the realization that the UK, three things. The UK did not raise their interest rate. The Euro did. And then Trichet, the ECB guy from the Eurozone, came out and said that despite Moody's downgrade of Portugal, they were going to make other arrangements that would not affect Portugal. So that had an immediate impact on the Eurozone and pushed it back up in, not a whole lot, but still, if you're in that trade, 150 pips, if you're in the wrong direction, is quite a bit. And as you can see on our 30-minute chart, that last signal or possible signal, the green line is not a signal, it's a possible signal, never got hit. So it called the end of that run, and then there was no run up on the 30-minute chart. However, if you would drop down to the 5, down to the 5-minute chart, you see, look at how crazy that little run up there is. You would have got that this trade right here. Let me just bring this out. Yeah, you can see the run up pretty clearly here, and it called it very nicely, from here up to that first profit target. But a nice little 40 pip run. And there's a good example right there of what I was talking about, this section here. See the length of that consolidation period that it's in right now. Hanging just above our Rubicon indicator, the spine, the red line. And right below the 4370 line, which is our next possible signal to the upside. But right now, no signal, so no activity. And when you see that, guys, when you see a currency flatten out like that, you will also see the Rubicon indicator, the spine, I should say, begin to flatten out. And you just know that's a no trading zone. I mean, look at how flat that line is on the 15-minute. that essentially means don't trade. When you see a flat spine, no trading zone. If I go up to the 30-minute, you see it flattening out even on the 30-minute. Right there. You also see on the 30-minute, which many of you know, I really like the 30-minute, how the spine is holding the currency right here. It's unable to break through. So even though we had a strong push up, once it hit our spine, it became resistance. The spine became resistance, and it has been unable for the last 6 or 7 hours to break through that spine. Now, having said all that, tomorrow is non-farm payroll. Let me do the following. Let me bring up the Forex Factory. And it is critical, guys, that everybody is using this simple tool that's freely available to everybody called forexfactory.com. And what it does on its front page, it gives you a calendar of news events. The first thing I would recommend you do is to make sure that the clock on Forex calendar, which is here, corresponds to the clock on your computer, which is down in the right hand corner of your screen. If they don't match, do the following. Just simply hit the clock. It'll bring you to another page, and then make sure that you line up your time zone. For me, Pacific time in the US, which is GMT -8. Click Save Changes. Then come back to your calendar. And now the important thing is that all the times for the news announcements are now in line or corresponding to the time on your computer or the time in your time zone. So, looking at tomorrow, Friday. And again, look at today. Lots of news announcements today, but now let's look at tomorrow. And here we go. First off, during the European session, out of the GBP, PPI input, Canadian employment, unemployment, and then the big daddy of them all, 5:30 a.m. California time, non-farm payroll. The most important thing is don't be in a trade around this time. Regardless of what the charts are saying or doing or telling you, don't be in a trade. I would recommend at least 20 minutes and even up to 30 minutes. I'd say 30 minutes or more prior to non-farm payroll and at least 30 minutes afterwards. Because what happens for hours prior to non-farm payroll, guys, there's crazy price action because all the big traders are sitting over on the sidelines. I want to make sure I mention that to you. So please do pay attention to that, and always pay attention to Forex Factory. Okay, now having said that, you can see the last 2 days some very, very nice trades on Rubicon on that 30-minute chart, which, as many of you know, I really like. Like I said before, if you have a strong trend, and we had this nice strong trend down all this week, on the euro, you can by all means drop to the 15-minute, but I only like to do that when you're with the overall strong trend. So on the 30-minute, here we go here. It breaks here on the first signal on Monday. That's good for about 30 pips. Sorry, that's that signal over here. It hits over here. Then there's another signal for about 23. We get another signal here, about 30. Another signal here, about 12. Another signal here, 15, 16 pips. And then finally down here, and I would be getting nervous personally down here anyway, but it's still about a 20 pip trade. So each one of those executed perfectly. Now before you do that, guys, always remember our methodology. Pay attention to our target point and particularly the stop loss, which is the rust-colored price here. What's going to happen is, let me run through this actually. 4 things happen. The price action or the candles will break through the spine, which is the red line. the aqua blue line, I also call the railroad track, will then break through the spine also. So first thing candles, second thing the aqua blue line will come through. You now know you have a potential trade. The third thing that happens is the green line will come into play. And the fourth thing that will happen, and only after the fourth thing happens, you get the arrow, and that comes when you have a breach of the green line. That's when you enter the trade. And then your stop loss is that rust-colored box back up here. Okay. Now before you even get down there to that situation, I got trades over here as well to the upside. Let me clean up my Rubicon chart for a moment. Okay, it's clean. Always go out to the daily chart. Start on the daily chart, guys. And look what we got. I like to squeeze the daily chart. Bring it out so you can see at least a year's worth of activity, and we can see it right there. Euro, that's 4 hours. Sorry, let me go to the daily chart. Yeah, that's more like it. I still have that. I'm going to change that trend line actually now on the daily chart. There's a pretty obvious trend line in play right here. There she is. So I'll make sure I put any obvious trend lines on. I want to see at least 1 year of price action. You can see that I've already marked it up here. Previous support resistance point up here at the 150. We're nowhere near it right now, but I like to leave that on the chart because that's a major resistance point. As you can see over here, back in 2009, when the currency tested that 150 level, it went at it for, oh gosh, about a month. It tried to break through and never fully did, and that led to a drop of over 3,000 pips. So very important to take note of it. And then when it came back up again, right here in May, it unable to break it again, and that led to a drop of close to 1,000 pips. So very important that anytime we approach that 150 line, that we as traders pay very close attention to it. Now the next thing I want to do is draw Fibonacci. It gives me a good idea of where we're at right now, and I like to draw it in the direction of the prevailing trend. So obviously the trend from June of last year, which is a year ago, is to the upside. Now let's bring that out. Oh, sorry. Okay, I gotta go out this way. So I'll then take my Fibonacci and draw it in the direction of that trend. Take the lowest point, bring it to the highest point, and drop. Now we can blow it out and see what information can we garnish from that. Well, immediately, guys, we see some very important things. It's going to blow it up a little bit. Here's the 23 fib right here. And you can see that for quite some time, all of May, June, and into July, this baby has been almost acting like a pivot point. The currency kind of going back and forth through it. And if I go back over here, earlier on to March, you can see that initially that same 23% fib was a resistance point, and then once it broke it, it went all the way up to test that 150. Comes back, and that 23 fib is still in play. Now, the thing that I will note there is that we never hit the 38% fib. Never was able to pull back, so there's a weakness to the down move. It was unable to come back and test the 38. I would say it this way, guys. Almost always, when there's been a big run-up, a currency will come back and test the 23. Almost always. Now, is almost always 100%?